And they have just launched their offices here in Shanghai. It's a wholly owned foreign enterprise, and it expands your footprint here in China. But it's coming, obviously, at a difficult time. We've seen the sell-offs in the bond markets, the equity markets, as part of this deleveraging campaign starts to bite here. And, of course, most recently, we've had the credit downgrade by Moody's for China over their concerns about the country's debt profile. What kind of challenges does that backdrop pose to your business here and your expansion plans for China?
You know, Tom, it's an interesting thing. I think being from Vanguard, I'm by nature a contrarian. So I think the fact that all that's happening is actually a good thing for us because we have a very long view. And so we'd been studying coming to Shanghai for quite some time. We'd expanded pretty dramatically in Hong Kong. We have a representative office in Beijing. And the idea of coming and establishing a WFOE here in a free trade zone to learn more so that we can better serve our clients, not only here in China, but also globally by understanding the economy a little bit more broadly.
And what's the next logical step then for Vanguard in China? Is it setting up a private fund? And what kind of clients are you targeting?
Yeah, so it's a great question. And the short answer is we don't know yet. You know, what we're thinking about, we have some large institutional clients. And we're looking at, are there ways down the road as the markets open up that we could actually serve a broader constituency, maybe even individual investors, but it would probably be through some different kind of platform than exists today. But the only way to really understand that is to be here. And so a lot of what we've instructed the team is, you know, use your time here to better get to know the markets, better get to know the regulators, better get to know, serve our clients, if you will, but also look for these opportunities if there are opportunities to expand. And I'm optimistic, but it's going to take some time. All the factors that you described are certainly going to be constraints in the short run.
Are you able to give us any kind of time frame on where you might drive this? I know, retail investors in China, if you could get a slice of that market, that would be huge, but as you point to, it's going to be a long time, isn't it? But you've been having conversations with the regulators here. What have they been saying to you?
All the regulators tell us that what they really want to see are more open markets, more open capital flow, and very importantly, the development of a more sophisticated retail investor base. You know, today, as you probably know, retail investors tend to buy and trade individual securities pretty aggressively. And the idea of actually having funds for them to invest in and take a longer-term perspective really hasn't taken hold yet. I think the regulators would actually like that from a capital markets development standpoint. And I've heard over and over again from my contacts here that a good retail capital market space would add stability to the market and would also add sort of more sustainable growth opportunities for the market. So that's probably not a 12-month thing, but maybe 3 to 5 years you begin to see these things evolve. We're real students. So if you look at what Alibaba did in the money market fund business, just 3 years ago, they launched an online money market fund, very novel approach. It's the largest money market fund in the world, incredible uptake, and no one would have predicted that that could happen. And so that's the kind of thing that as a student, you really look at and you say, I wonder if we can figure out how to do something.
Another question on many people's lips here in China is whether the MSCI includes the A shares in their next decision, which I believe is sometime in June. Is it time for that to happen?
I think it's time for that to happen. I don't have any particular insight. As you may know, we established A shares in our emerging markets fund, which uses a different benchmark provider, FTSE. And the FTSE benchmark includes now 1,900 listed companies in the A shares market. It's been a fantastic thing for our shareholders, despite the fact that the markets have been up and down quite a bit. Just getting exposure to this economy that way in the largest emerging market fund in the world, we think was really important.